Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Good day, everyone. Thanks for joining us on the Smart Property Investment Show. In the studio today, I have someone who has made a return after a 2-year hiatus. Hopefully he's better this time around. Last time we got him on the studio, it was probably one of the most poor performing podcasts to date. I think the content wasn't very engaging, so he's had 2 years to practice and get ready to go again. I am happy to report, though, the Smart Property Investment podcast continues to grow and strive forward. Just looking at the numbers that the guys gave me yesterday on the May numbers, and we're up by 70% in terms of downloads and listens. So this thing is flying along, and I do thank you and appreciate you joining us on this ride. It's nice to know, and I get a lot of satisfaction out of it, that this is resonating. And even people stop me on the streets now and tell me that they do listen to the show, and it's actually changed the way that they view property investment and how they are approaching investments. So I get a lot of satisfaction out of that. Please do keep connected. And if you like what we're doing and you want some questions answered, you can always email the team editor at smartpropertyinvestment.com.au. But let's move on. Tom Panos, real estate extraordinaire, back in the studio. How you going?
How you going? I've got to nail it or I won't be back for another 2 years.
I know.
So
you're under pressure.
This is like grand final. This is like state of origin stuff for me.
This is it. And I imagine a lot of our listeners, I know they do, listen to your Sunday Night Rant. I'm a big fan of it. And if you're not tuning into this, you follow Tom at, what's your Facebook, Tom Panos?
I think if they just, Google my name or put Tom Panos into the Facebook search thing, it'll come up.
Okay. So if you don't know about Tom, Tom is synonymous in Australia's real estate industry. He wears a number of different hats, and he's a good friend of Momentum Media. Smart Property Investment has been for many years. Hat number one, he's a top auctioneer, and he operates mainly around the sort of inner city area, and we'll get a little bit into that because I'm going to ask him about the market going on. Number two, Tom has a relationship with News Corp, so he's integral in the way in which News Corp continues to deliver all the great publications within the local areas that they operate. So he's doing a lot of work there. And he also runs a thing called the Real Estate Gym. So many of Australia's top agents lean on Tom to help them become better real estate agents. Fair summary?
Yeah, that's about a summary. And I know that you guys are involved in a number of things in the world of business. Real estate's very close to your heart, not just with consumers, but also with real estate agents. And I can't help but notice that a lot of the REB top 100 agents that you announce each year are real estate gym members,
Yeah, that's good. So if you're a real estate agent, go and check out Tom's stuff. But anyway, that's a bit of a preamble to get us where we're going to go today. What I want to chat about, Tom, is the market that we're in right now.
Yeah.
People are starting to hurt a little bit, particularly in Sydney and Melbourne. And I know you're comfortable chatting right across Australia, so we'll do that. The market in Sydney in particular has softened. In some areas, dropping considerably. So there's a lot of people who are concerned. Obviously, this podcast is for property investors. So property investors like to see opportunity where other people might be someone's misfortune. So there could be some opportunities popping up in these Sydney and Melbourne markets. Yeah. What's your read of it all?
I think, Phil, all over Australia, it's trending down. Hobart's the only one that appears to not have real estate fatigue. So I would say that if you're an investor right now, you are buying at a discounted level than what you were, same time a year ago, even 6 months ago. You're buying at discount levels. I know that pretty much every question from an interested investor or a first home buyer or what have you always is it going to keep going down? Like when is it bottomed? And I don't think we're going to answer that question here, Phil, because the bottom line is the only way the market has bottomed is when the market's started to go back up, but by that stage it's too late because you'll be buying above the bottom.
So you're real estate gym members, Australia's real estate agents general. Are they shitting themselves at the moment?
I think a lot of them are extremely concerned because what's happened is there's a great saying, Warren Buffett I think is the author of the saying, is when the tide goes down, you're going to work out who's been swimming with their bathers and who's been swimming naked. And I think what's actually happening right now is fear of missing out has left the marketplace. And for many real estate agents that have been swimming naked, fear of missing out has been their one strategy to get deals across the line. That's no longer the case, Phil. So essentially what's going on is 10, 20, 30 people don't rock up to an open for inspection. Normally when you go into a negotiation, you normally had 2 to 3 people as an agent to play against each other to get a deal. So you were using buyer competition, buyer frenzy in many instances in Sydney and Melbourne. That's gone now, Phil. So what it needs is a real estate agent that's got the ability to get the vendor to accept the reality of the marketplace and a buyer to actually commit, even though there's another 10 properties that they can buy and they're not scared of missing out. That's a special skill set, Phil. Not every real estate agent can do that. And if you've been a real estate agent that was brought up in an era where all you had to do was put the keys in the door, open the door, say to the buyers, if you like it, let me know, and buyers used to rush back and want to buy it because they didn't want to miss out, you're going to struggle now because this marketplace needs deal makers, not order takers, and there's not that many.
So for me as a property investor, that sounds pretty good to me. So there's less competition in the market, so therefore there's less price pressure put on the value of real estate. Point number one. Point number two, there's some agents out there who aren't very good.
Correct.
So I'm going to go and try and identify who those agents are who are either need the next payday, so they'll sell quickly and sell the price that I'm satisfied with, or I might come up against someone who knows what they're doing and I've got my work cut out. So let's talk about buying real estate in a softening market.
Yeah.
From the perspective, number one, how can you as a buyer get the best out of the agent, i.e. make sure you can get the cheapest price you can possibly? And number two, what are the long-term tactics that you can embrace as part of this sort of process? So basic fundamentals of buying real estate. So you don't piss an agent off because the next time he's got a property in a similar location, a similar price, he comes to you first, so you get the best deals. Softening market, what's your 5 steps?
In a softening market, step number one is have super product knowledge. And what I mean by that is only you will be able to tell if something is super buying. The real estate agent has got a vested interest, right? Your friends and family are going to want to try and protect you, and they're not experts in telling you what fair market value in that market is. So the truth is, you've basically got to say to yourself, hey, I am going to find out what every property has sold in the last 15 to 30 days. Because if you're using data from CoreLogic, that data is a little bit old. So what you'll be doing, Phil, is making a comparison on reference points of properties that are in a different market, because the market now appears to be changing on a weekly basis. You're seeing clearance rates go down weekly. And we'll touch on clearance rates in a moment, because clearance rates have to be one of the most deceptive indicators of property at the moment, because what people don't realize is when they read a clearance rate on a Sunday in the media, it does not include what is I call non-collectibles. Non-collectibles, Phil, are the properties that the data analysts could not collect off an agent on Saturday. And why haven't they been able to collect it? One of 2 reasons. They couldn't get onto the agent, or they did get onto the agent and the agent wouldn't give them the information. If there's 30% of properties that are uncollectible, which is quite normal in Sydney, Melbourne and Brisbane many times, you're basically having 30% of your properties not reported, and I've got a gut feeling that most of that 30% have not sold. So if you've got a clearance rate of collectibles of around 50 to 60%, you add the uncollectibles and you're really looking at clearance rates of 30 to 40%. So I think it's important that if you are an investor listening to this great show right now, that you have to be the Google of that marketplace yourself. You've got to be going to doing the research, you know.
Okay. Good point. Point one.
The second point is that you can't have a gut feel that financing's going to be okay. You need to have clean paperwork that basically gives no out to the broker or the bank. Because I've got clients right now who have got deals in Melbourne and in Sydney that clients are struggling to get financing with a week to settlement, because banks are basically saying, hey, we're not so sure on that anymore. That wasn't happening before. I mean, they're asking for simple things like, we want you to document and provide for us your living expenses. We don't want you just to tell us what they are. We want to see evidence of those. Some people are filling out 35-page documents now to get standard $400,000 loans across. So I think the second one, Phil, would be have absolute certainty that you've got the capacity to do a deal with financing, you know?
Okay. And that gives you credibility and ability to move quickly with confidence, right?
Absolutely,
Yeah.
because if you're an agent, Phil, I'm able to say to you, listen, I know you want 600 for this property, but if you can wrap this up for me for 520, I'm giving you a 10% deposit in the next 2 hours, unconditionally. Take that check to your owners. And there's a few owners that are in pain at the moment and they need to sell. You can't have that conversation unless you've got unconditional finance from your bank broker.
Good point. All right, point 3.
Point number 3, and you touched on it, is you want to be in the little black book of agents. What I mean by that is you want to have a relationship with agents that give you access to off-market transactions. These are the ones that don't hit domain or realestate.com. These are the ones that the agent lists them and then basically says, I'm going back to these buyers that I've already got and I'm going to introduce them to the property, and these properties get sold as off-market transactions. How do you do that? Like and trust with a real estate agent.
Very good point. Point number 4, Tom.
Point number 4 would be make decisions logically, not emotionally. And this is something that does not only matter when a market's going down, it matters all the time in real estate, but I actually see it more profound when the market's going down. Because what actually happens is, Phil, you look at 6 properties in a suburb, then you meet a great real estate agent that says, hey, I've got this property. It's only like 3 minutes away from really where you want to buy, but this thing is just extraordinary value. Have a look at it, but I'm letting you know you're going to have to do a deal in an hour. So what happens is you go in and you look at it and you emotionally fall in love with it, and it's only 3 weeks later when it's too late and you've done a deal that you actually realize, hey, it might have been 3 minutes away, but you're actually bought in an area that's got a price differential of around 20%. And that's why I say just make your decisions with logic, not emotion, if you're an investor.
Okay, and for point number 5, and I'll preface this one, is it harder to invest in real estate in a softening market than a market going up? You know, we're talking about how you can get benefits as an investor because prices are going down, but I imagine there's inherent risks associated with that as well. So what's a negative in buying in a downward market?
The negative is that you are fighting against a deep psychological need of fear and greed. And the issue is that when the market's going down, we're taught in life, and I mentioned it in a previous podcast that we had done on another one of your platforms, the behavioral economist in 1979, Daniel Kahneman, who studied that people will go to extreme lengths to save $1 than to win $1. And the issue that you have is when you're buying in a market that's trending down, you're concerned as a buyer, like you're swapping your $800,000 with an asset, and if that asset trends down to 700, you feel like I've lost $100,000. So you've got this psychological fear in your head you're going to lose $100,000. So that's what drives you to keep saying, hey, I want to buy at the bottom of the market. I want to buy at the bottom of the market. The point is, you should not look at it that way. What you should look at is, hey, this $800,000 property is trending down. I don't know when this is going to stop, but what I do know is I've been looking to buy a property. This property would have cost me $850, $900 6 months ago. I'm now buying it at a discounted level. Yes, potentially it could go down to $750. I don't know that. But what I'm doing is, as a real estate investor, and you're a real estate investor, and you know that what you've got to go in is with a mentality that if it does go down by 5%, I've weathered it because I'm playing the long game. And the long game says that that 5% drop is going to be buffered over a 10-year period. That is a better strategy than waiting till the market has bottomed and going in then, because not only will it be too late, because the only way you know that the market's bottomed is when it's gone up, but you'll have less to pick from, because when the market starts going up, it's demand and supply that creates the market to actually have less listings. So you end up not getting your ideal property. So I think, to answer your last question, which I've gone about it in a very long way, you've got to be able to go against 95% of people when the market's going down and they're thinking, hey, we're going to feel pain if we buy now.
So you're an auctioneer. Every Saturday you're out there. How many auctions you do every Saturday, thereabouts?
So it ranges between 7 in the winter months to 13 in the summer, spring months.
Okay.
Yeah.
So you're pretty busy on a Saturday. When's the last time you had a Saturday to yourself?
The only Saturdays I have off are, so the answer to that question was Anzac Day.
Anzac Day?
Yeah.
Wow. Okay.
Yeah.
Is your paycheck sort of in trouble because there's less auctions in a downward market, or is that just a myth that people don't really understand? Can you still auction in a downward market? Or are you going to do less auctions because no one's auctioning?
So the answer to that question is my paycheck's not down because I don't know whether it's going to help your listeners, but if you just understand the concept of an auctioneer, the auctioneer can only do a certain amount of auctions, and I've always got enough auctions anyway.
Yeah.
So I'm still doing the same amount
of auctions.
Same amount.
Yeah.
The issue is, will an auctioneer make less money that doesn't have an oversupply of auctions? The answer is yes, because I actually think, and I know this comes strange coming from an auctioneer, I do not think that every property is suited to going to auction in this market that was going to auction before. I simply think that auctions are about creating an environment where there's competition and creating a buyer frenzy and fear of missing out and social proof. And I believe that there are certain properties in this market that will have very few people bidding at auction, and it's not in the best interest of a client to advise those people to use auction as the method of sale.
Okay.
So the answer is yes, there should be, as a proportion, less property should be going to auction in a market that is trending down.
So as a buyer of real estate in a downward market at auction, all the stuff we spoke about, all relevant, any particular, how should you play at an auction if you're looking to buy in a downward market?
Write a number on a piece of paper that you sign off on, which is your walk-away figure, because you'll normally make a more rational decision away from the auction than the auction. You're normally a little bit more vulnerable, and particularly if you meet a very persuasive auctioneer and a decent salesperson, the environment is perfect for you to pay 10% more. So I would say write a number down, have someone to keep you accountable to that number. I think the other thing would be that you've got to buy enough tickets to the lottery. And what I mean by that is have multiple balls up in the air at the one time. So you should have lots of plan Bs going on. You should not be sitting there deciding on 12 Smith Street, spending all week visualizing 12 Smith Street, driving around 12 Smith Street, emotionally falling in love with 12 Smith Street, and then sitting at 12 Smith Street on the day, knowing that an agent is saying to you, listen, you've come this far, what's another 50,000? I think great investors, what they do is they've got 12 Smith Street, they've got 13 Brown Road, they've got 27 Kingston Road, they've got 47 Balfour Street, and what they're saying is, hey, they're the numbers on each one. If I miss out on that, I've got this one. So they can sit there in front of an agent at an auction, if a property's been passed in, saying, if you don't take this offer, that's all good. I'm just letting you know, here are my other options.
And as a seller of real estate, so we're talking about buying real estate, but investors do sell real estate. Choosing to go to auction in a softening market versus private treaty, that's something that you need to have a discussion and conversation with your real estate agent about the best strategy. But as one of, or the best auctioneer in the country, your job is to try and get the best price possible for a vendor. So how do you choose, as a seller of real estate, does the agent I'm using choose the auctioneer they use, or do I choose the auctioneer myself? And how do I know if the auctioneer who's selling my property is a good one?
Okay, so 95% of auctioneers that are selected by the agent. There's a relationship between the agent and the auctioneer, and it's their regular supplier of auctions. There are maybe 5% of cases, and one's happened this morning, which I've shown you come through my mobile phone, where the agent doesn't use you, but the vendor has seen you as an auctioneer. Maybe you did an auction in their street. Maybe they've seen you on live stream, where I live stream some of my auctions. Maybe they've seen me on Sky Business. The bottom line is they've come through a direct relationship with the auctioneer. Generally speaking, my preference is always for a vendor to actually go with the auctioneer that the agent suggests to them. And the reason why is that there's a working relationship and they know how they work together. It's a little bit like, most airline accidents happen when the pilot and the co-pilot are working together for the first time, believe it or not. They have 75% of accidents, based on what I've listened to a podcast on this subject, happen when you've got a co-pilot and pilot flying as a team first time. That far beats an existing team that may be sleep deprived, which I found very, surprising. But the more I think about it, it does make sense, because there's this intuition that is happening between the agent and the auctioneer. My belief, Phil, is that the real estate agent pays far more significant value to the total transaction of the result of an auction listing than an auctioneer. That most auctioneers across Sydney, Melbourne, that are doing regular numbers, you're going to be safe with. The worst thing that can happen, but, is to have the perfect marketing campaign, the perfect strategy, and then on the day you have an auctioneer, a bad auctioneer, in front of a good buyer. That's very expensive. So what I'd suggest to the listeners of this podcast is that they ask the real estate agent to provide 3 videos of the auctioneer before they sign off, because you don't want to be in for a bad surprise finding that what you really hired is a guy who's a wedding MC that does 2 or 3 auctions on a Saturday, that all of a sudden comes across a very smart, savvy buyer like yourself, and they get thrown a curveball, like, "Can I ask you, Mr. Auctioneer, is there land contamination here? Can you please disclose it?" And you just see that this amateur auctioneer is hit for a 6, becomes weak, and creates fear against all the other buyers, and that can destroy the great work of an auction listing that may have had $20,000 in marketing spent on it. It's not worth the risk.
Yeah, and tuning in here, I know Tom quite well, and I know he's a big advocate of self-improvement constantly, perpetually, and his craft, in this case auctioneering, is something which is very important to him. But the question I've got for you, Tom, how have you improved your skills and capabilities as an auctioneer over the last year or so? What are you doing differently today that you weren't doing a year or so ago that creates a better outcome for the member?
Yeah. So one of the things I do is I'll watch things on YouTube. I find that YouTube is quite a great educational tool. Like, even if what I'm doing is picking up some one-liners, like if someone's not bidding, and I heard the other day an auctioneer say traditional 1-minute silence before the first bid, and it creates a bit of humor. So watching YouTube clips, number 1. Number 2 is watching yourself on video, and you can do that very well now with any mobile phone. You get someone to tape the auction, because when you're in the frame, you really can't see the picture. It's when you step back and watch a video, you say, "Oh, wow, do I do that? Do I and ah? Do I only look at one side of the room? Do I stutter?" And you can only see that if you do a replay on video. So, and I'm obsessed with learning, like you. I'm a lifelong learner. I'll sit there and I won't think to myself, that auctioneer is better than me. I won't think to myself, oh, that guy is a show-off. I'll think to myself, hey, what can I learn off that person? So if you start with a position of curiosity, I think you'll end up becoming a bigger learner than anyone else.
Mm-hmm. Yeah, that's good. And we're going to have to wind up, Tom, but last question, is it a good time to invest in real estate?
It is a good time to invest in real estate. Is it the best time? I can't answer that, but I can say to you, it's a no-brainer. If you were looking to buy a house in February and we're now in the middle of the year, it is now a better time to buy a house. Will it be a better time than in September, October? I don't know. I do know that there's a lot of stock that comes on the market in September, October. And I think if you're a buyer, you rather buy when there's competition than lesser stock. So I think it's a pretty safe strategy to say, hey, I'm going to gear myself up to hit this market in spring when there's a plethora of listings coming on the market.
There you go. Very good, Tom. And to go back to my original comments, the podcast we did early days is probably one of our highest ever. So people, for some reason, like what you say. I don't know why, but it's a lot of gems in there, guys. particularly how to buy in a softening market, and plenty of opportunities out there. Is it a good time to invest in real estate? I think it's always a good time to invest in real estate if you can buy, if you've got the facilities to buy. And I think to Tom's point number 2 was around having finance. That's a point of difference right now. If you have finance, you can bid with confidence, you can buy with confidence, and that's a differentiator, and hopefully you can get some good properties. Thanks again, Tom.
Thank you so much for having me on, Phil.
Thank you very much. And remember to check out Tom. If you like watching auctions, Tom posts a lot of his auctions on his Facebook page and other areas. Just look tompanos.com.au. Is that right?
Yeah. I think tompanos.com.au on Facebook. You'll see
there's heaps of stuff. Just it's really interesting. If you watch what he does, if you want to know how a good auctioneer can push a sales price upward, you'll see it in action there. So, you can learn all the tricks. But anyway, thanks for tuning in to the Smart Property Investment Show. If you're not yet subscribing to our daily morning market intelligence, so you're the first to know what's happening in property right across Australia, smartpropertyinvestment.com.au/subscribe. If you'd like to get your info from social media, just search Smart Property HQ. Plenty of information there, and please do keep those reviews coming on iTunes. We do appreciate them. As I've mentioned beforehand, it's just not me here behind the microphone. There's a big team backing this podcast up and producing it. And as I said beforehand, it's really great to know that's resonating with you all. So we'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.